Hello to everybody, our dear subscribers. FutureTrend channel is back to you, and today we'd like to point out the fact that the pound continues to be the main mover, and the currency market the selling pressure does not abate on the back of renewed fears of a hard Brexit. The oceanic currencies at the same time keep thriving as fundamentals pick up, and the macro risk removal of United States-China trade tensions clears the path for the smart money to sponsor long plays. Want to find out the outlook for the rest of interesting major pairs? Keep listening to our reports. Friends, today the one-way bearish traffic in the sterling remains the norm as the market discounts the increased odds of a hard Brexit. As UK Prime Minister Johnson prepares the market for a change in legislation that will prevent any extension of the Brexit transition period beyond December 31st, 2020. The uneventful Bank of England did little to appease the sterling sell-side action. As you could see, for example, in the chart of the cable, let's see the chart of the cable. We are near the psychological important barrier 130, which was, by the way, the highs from October 20. Previous resistance now acting as important support. Of course, in case of closure below this level, probably the path will be open for further downside. But we'd like to acknowledge the fact that overall the short-term position in the sterling remains quite bullish, while we are trading about 2670, where lies the bullish trend line, the trend line of 2019. Also here is the convergence of important moving averages. As you could see, for example, 200-day moving average is located at 2693. So from a long-term point of view, we should understand the technical picture continues to be in favor of another bullish momentum in the cable, while we are trading overall above the level of 127. Of course, we should understand that we are near the Christmas Eve, and of course the liquidity will be quite low. And from one point of view, that could lead the market to the absolutely doldrum position, to the dead kind of movies. But at the same time, in case of interesting events or news, of course, because of low liquidity, the movies in the currency market could be quite exaggerated. And in that case, we should be ready, and especially in the sterling crosses like sterling yen, you know how volatile could be the sterling yen. And from that point of view, you should pay attention to that, and of course to keep your stop losses very close to the entry levels. Don't forget about that. And once again, we'd like to mention the oceanic currencies. Oceanic currencies spurred by positive fundamentals. You know, the last economic news from Australia was quite upbeat. Australian jobs report. At the same time, New Zealand Q3 gross domestic product also beat expectations, and that keep traveling northbound, these two pairs, Aussie and Kiwi, while at the same time the Swiss remains beneficiary of seasonal tendencies. The euro, which has been characterized, let's see by the way the chart of the euro dollar. You know that at the moment the euro could be characterized by directionless bias. At an index level, this December continues to show little signs of life. And the Canadian dollar, by the way, today is a day of publication of Canadian retail sales numbers, and you know that Canadian dollar during previous trading session touched its important kind of longer-term uptrend line that was located around 3105. Break below that level, of course, could open the door to another move to the downside. The Canadian dollar, after the commanding bullish run this week, finally saw a slight pullback that does little to damage the overall improving bullish outlook for the Canadian dollar itself, in what's setting up to be a candidate, by the way, a candidate to start 2020 the same way it performed in the whole of 2019. That's with positive order flow, with the technicals and fundamentals converging. The United States dollar has attracted very tepid ebbs and flows, in a clear sign that trading activity in the world through that currency is starting to taper off for the year. Remember, January tends to be the best performing month, which, if it materializes, we are looking at a fairly cheap valuation in the greenback heading into next month. Lastly, the yen remains at depressed levels, and if my base case turns out to play out, I'm expecting the currency to resume its bearish tendencies during the month of January as risk sentiment, fundamentals and technicals stand. By the way, let's see the chart of the dollar yen. And the dollar yen at this moment could be characterized also like directionless. From a short-term point of view, there is an important resistance around 109.70. Don't forget that a longer-term picture continues to be a bearish one for the dollar yen, while we're trading, first of all, below a longer-term downtrend line located today around 110.50. All in all, let's wait. But don't forget about the Christmas Eve, and next week could be really, once again, could be really dead for the currency market as well as for other segments of the world capital markets. So be ready for that. Take care and bye-bye for now.